Hey, this is Matt from InvestiQuant. Today is Friday, September 18th, 2020, and today is options expiration day. We saw the markets gap up this morning, and they have sold off the majority of the session. So playing out much like the video we did this morning showed, where the bigger moves had been to the downside on this options expiration day. So what I want to do this afternoon is just take a look at what has happened historically when that bias that we saw this morning is starting to play out into the afternoon session. So let me set this up in Discover. We're going to use all four instruments. I'm going to use an intraday time-based entry, and we'll set it to 3 p.m. We'll set it up as a long exiting at the close of regular trading hours. Now, because I'm going to be using some post-open filters, I need to be a little bit less selective about the exact setup. That way I can keep as many samples as possible. So this is going to be a slight different variation than what we showed exactly at the open this morning, but we'll capture the same idea here. And in the post-open filters, I'm going to say that at 3 p.m., it's closing in the bottom 25% of the range. So it has seen selling come in throughout the session here, trading at the bottom portion of the range at 3 p.m. And then I'm going to say it is options expiration day. So I'm going to come into market events, scroll down to options expiration day, hit equals next to that, and then click view results. And here we go. So these are the results of going long at 3 p.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when trading in the bottom 25% of the intraday range on options expiration day. So historically, we've got 52 samples here in the S&P, 62 in the NASDAQ, 47 in the Dow and the Russell. Win rates on these all come in under 50%, some of those a little bit weaker, with NASDAQ leading the way on the downside at just 42%. You've got S&P at 46% winners, Dow about 45% winners, and Russell the strongest at 49%. So all of these just slightly weak on the win rates. And looking at the average win to average loss, you can see that the average loss is larger than the average win here in the S&P. It's larger in the NASDAQ. It's larger in the Dow. And the Russell is more 50-50. So that Russell is a little bit different than the others. And you can kind of see it there on the equity curve, where the Russell is pretty flat, whereas the other three instruments are trending to the downside here in recent years. Let's go ahead and take a look at the results distribution. I've got the ES selected for this. So I'm going to click the results distribution and take a look at this real quick. And again, like this morning, you can see the larger outsized moves happening on the downside and not really happening on the upside. So the green bars here are the winning samples. The red bars are the losing samples. The taller the bar, the more often it has happened. And then the more extreme to the right or to the left, the larger the move. So we've got 0 right here in the middle, and you see a bunch of green bars, or a bunch of samples in these green bars right next to 0. So these are very small winners, and then they trail off quickly. For the downside, you've got a small bar here for the first one. It starts to pick up, and then it starts tailing off, leaving a handful of outliers here on the downside as well. So once again, we are seeing the larger moves that have happened on the downside, and they have happened more frequently on the downside than on the upside as far as the direction goes for the win rate here. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.